What's up guys, Dirk here, happy Monday. So the weekly candle has just closed, which means we can have a look at the weekly charts to see what that tells us about what lies ahead for the immediate week ahead, but also for the next couple of weeks. So let's dive straight into today's video. If you are new to the channel, welcome. Feel free to subscribe down below, click the notification bell. If you want to get on my email list and get my free crypto masterclass, it is the first link in the description down below. Click that, enter your name and email. And of course, if you do find these updates valuable, I would really appreciate it if you share them on social media and if you click that thumbs up button, turn it blue, so it helps the algorithm show this to more people so more people can benefit from the analysis. Alright, so Bitcoin is currently at 19,831. We have had a second weekly close below now the 200-week moving average again, and that simply put is bearish. Okay, we got below it, this was looking bearish. We got this multi-week rally, we tried to reclaim it, it failed. And last week we dropped below it, and now we had a second week below it, confirming that bearishness. So basically, the simple analysis is that we are in a bearish continuation of this bearish trend until at least we can reclaim this 200-week moving average again, which currently is about 23,000. So as long as we are staying below 23,000 and we have to get a weekly close above there to be able to reclaim it, as long as that is the case, there is possibility for further downside continuation. I did make a video here on the channel about 2 or 3 weeks ago saying there is the potential for a crash in September. In fact, I've been saying this for weeks already, where even when we had this bottom in middle of June, which I also said based on the data that was likely to happen, it did indeed happen very accurately. We had this multi-week rally into the middle of August, 25K, and I've been saying September is a shake-up month and it is likely to result in a test of the lows or perhaps new lows. And so far it is very much looking like that is going to be the case again. Okay, so we had this bottom mid-June, we had this multi-week rally into middle of August, 25K, and we got rejected there. We are now below the 200-week moving average. So you can also say this is a bear flag, right? Just as these ones have been bear flags in a downward trend. So you can see the move down. This is basically just a bear flag or a rally in a bearish trend. It continues to the downside. And you can see we've had a few of them over here. You can see over here that resulted, so down, bear flag, down, bear flag, down. And again, you know, it's the same pattern. And is this time different? Well, until proven otherwise, it's likely to continue with the same pattern, which means down, which means that potentially, and I've been saying this for weeks also, this target here, the fair value gap, this is an imbalance or fair value gap here created once we finally broke this resistance over here, somewhere between 10 and 14,000. You can see over here it was resistance, was resistance. So it is very possible that if we continue to sell off, which the trend is signaling, plus combine that with the fact that September is a shakeout month, combine that with the fact that the stock markets are also selling off, combine that with a whole lot of other factors. The Federal Reserve has indicated that, you know, they're not interested in cutting rates anytime soon and that they really want to combat inflation, meaning there's potential for continued rate increases, maybe even in the near future, which would be bad for stocks and real estate and of course for crypto too. So put all those things together and there is a decent possibility, in my opinion, that we head to this $10,000 to $14,000 level for Bitcoin and quite potentially within the next few weeks. Now we have 3 days left until the monthly close, so I will do an update on the 1st to, you know, share my insight once we get that monthly candle close, but it's probably going to be pretty bad. I mean, seeing where we are now, 19.8, it's pretty unlikely we get back above like 23 or 24 in the next 3 days. So once again, to sum up, below the 200-week moving average is bad, and unless we can reclaim that with a weekly close back above 23K, it is very possible that we go to somewhere between 10 and 14,000, somewhere within the next few weeks, very possibly. Looking at Ethereum, we're back at under 1,500 at 1447. We had a very nice rally in anticipation of the merge, so we bounced off these lows in June. We got a nice more than 100% rally, right? It doubled, more than doubled. And it went to exactly this level over here, which was the peak over here. Exactly, you can see over there, horizontal level, 2030. And since then, we have actually pulled back more than 25%. We are still above the 200-week moving average on Ethereum, but that is not as significant on the Ether chart as it is on BTC. It just simply doesn't have the historical track record and significance of being, support for this overall trend. So I do think, we can see what happens. Maybe it bounces off it. But again, if Bitcoin continues to sell off and goes to the lows or new lows, it's very likely that Ethereum is also going to go, to the lows or new lows. And again, we could retest these lows. We could go somewhere between 700 and 800 once again. But if that breaks, and this is still very much a possibility, I still think there is a chance for Ethereum to go somewhere between $300 and $500 if we get a really big sell-off in the stock markets and in Bitcoin. And then basically Ethereum is going to follow. And the altcoins are also going to follow, even maybe worse percentage-wise as a sell-off than Ethereum. That's just basically the relationship, how it works. Now, again, guys, this is not a guaranteed thing. It is about probabilities. But if you're looking at the charts, if you're looking at what they're telling us, it's a bearish trend until proven otherwise. And there is a lot of selling pressure. And all that we need now is if the stock market continues to sell off, it's very likely going to take crypto with it, take Bitcoin down with it, Bitcoin's going to take Ethereum down with it. And of course, we have the merge coming up for Ethereum, which is set to happen somewhere 15 or 16 September. That can still change by about a week. And there is absolutely no guarantee that it is going to happen, that it's going to go as planned, that, everything is going to go okay. That's why I made this video when I said there's a potential for a crash in September. I also talked about Ethereum being a buy the rumor, kind of sell the event kind of thing with this whole merge. There was a huge amount of hype the last 2 months. The open interest on options on Ethereum was at the same levels as the May and November 2021 top. This time, seems when it reached that level, again, it doesn't seem like it was any different because we got rejected at those levels. And, if something goes wrong with the merge or people continue to sell off, this could still go a lot lower and potentially, like I said, in extreme cases, somewhere between $300 and $500, which would put us at the same percentage drawdown as the 2018 bear market. So again, while it sounds dramatic and it sounds pretty bad in terms of drawdown, it wouldn't be more than 2018. We actually saw this kind of drawdown already. So at this point in time, we haven't had that similar kind of drawdown yet, both for Bitcoin and for Ethereum. For Bitcoin, it would be somewhere between 10 and 14,000 to match the 2018 drawdown. And for Ethereum, again, somewhere between $300 and $500. If you do that calculation, you will come out with those same numbers. So to sum up for Ethereum, as long as we're below this 2030 level, the trend is still down. We got rejected here. You can see over here, that was that level. It was also almost basically the support. You can draw a wider range over here. So if you draw it like that, you can see these two weekly candles into that and back down. It was also the support here in the May 2021 sell-off. So we got rejected here, and now the likely target is probably once again the lows, test this zone 700 to 800. But if that breaks, 300 to 500, in my opinion. Let's see how things progress week by week. And then finally, a quick look at the S&P 500, the SPX, and one thing that you can note here, I've also been saying this for the last couple of videos, you can see very much a similarity between 2008 and what is happening now. We broke down, we sell off below the 50-week moving average into the 200, back up to the 50, rejected here where the cross is, and then we broke below the 200 and had a massive, massive global financial crisis. Now, we are seeing something similar. We have a huge negative RSI divergence that started in January 2018, where the price is making higher highs, but the RSI is making lower highs, and that usually indicates a warning of a reversal. Now again, because this has spread over 4 years, or more than 4 years at this point, we don't know how long that's going to take. That could still take weeks, months, maybe even another year before that ends up completely reversing. So there is still a possibility that we do get some sort of change and we still go up to this trend line one more time at some point within the next year. That is still a possibility. But for now, the similarities are very much so that we got the sell-off, went below the 50, almost hit the 200, back to the 50, like you can see over here, and again we got rejected at that 50 so far, with 2 weeks down from that 50. So if I zoom in over here, you can see perfectly rejected at that 50-week moving average. The first week we just had another second week down, big red down week. So at this point in time with the S&P 500, there's a very close similarity to 2008, and we are going into the 2 worst months that tend to have stock market crashes, which is September and October. So it does not look promising. Again, it is not guaranteed, but we will have to watch this week by week. So if we can flip this level, 43.30, and get back above this 50-week moving average on the S&P 500, things look good for the bulls. But until that point, we have to be careful. And if we break back below these lows, if we break below the 200-week moving average on the S&P 500, things could get very bad, and we might see a repeat of 2008, which, if that happens to stocks, seeing the correlation between Bitcoin and the stock market, it's very likely that Bitcoin and the rest of crypto could go a lot lower. So let's hope that is not going to be the case. I'd be okay with, a retest of the lows or maybe slightly lower, and then hopefully a bounce in Q4 for the midterm elections, as the average tends to be for the stock markets. But in these next few weeks ahead, it is very possible we still go lower, like I've said, on Bitcoin, on Ethereum, and here in the S&P 500 and the stock market. So let's take this week by week to see how it develops, because it's very much about probabilities. We have to watch which direction things are going to go. Do we flip the upside and do we continue higher, or do we continue going lower, break key support levels, and potentially go a lot lower with a major crash? That is something we will only know 1 week at a time. Now, be sure to subscribe to the channel down below if you haven't done so yet, because on the first of every month I make an analysis like this, but with the monthly candle, which gives a more insight into basically longer term time frames. This is the weekly. Obviously the monthly tells us for the month ahead, but also for the next few months and potentially for the rest of the year. So be sure to subscribe, smash the like button down below, and then tune in on the first, where I will do the update on the monthly candles. Thanks for watching, stay safe, and I will see you in the next video.